With more on the Bank of Canada's third quarter loss, we're now joined by Pedro Antunes. Mr. Antunes is the Chief Economist for the Conference Board of Canada. Mr. Antunes, thank you for joining us today.
You're welcome. It's a pleasure to be here.
So Canada's central bank, we should say right off top, not the only national institution posting these huge losses, but how troubling is it for the bank? How unique is it for the bank to be reporting this loss of $522 million?
Yeah, no, that's over essentially the last quarter, quarter three. And it is unusual because typically the bank is a lender of last resort and it actually has assets that earn interest. And on a net basis, it earns a net income. And that income is essentially, as far as I know, has been positive for the last 30 years at least. And that is given, in essence, on a regular basis to the federal government. So it goes into the federal government's, general revenues in terms of its budget planning, et cetera.
Mm-hmm. Which I'll get to in a moment, but I think it's worthwhile to help people understand just how we got here. What exactly did the Bank of Canada do to get to this point where they're looking at this loss, again, for the very first time in decades?
Well, it's a combination of two things, really. As you know, during the pandemic, the Bank of Canada wanted to inject a lot of liquidity into the system. And what that means is essentially the Bank of Canada can, essentially print money, if you'd like, in a way that enables it to purchase assets. And the assets it purchased were bonds, Government of Canada bonds, provincial bonds. It even got involved into corporate bonds and mortgage bonds to try and get as much liquidity out there as possible in a time of crisis where people really didn't know if the financial system would seize in a situation where we were closing down the economy. So the bank, I think, acted in a very responsible way, very quickly, to try and ensure that we kept the economy flowing through that very tough time. But what that means now is that the bank is now holding a lot of these assets that are essentially Government of Canada 10-year bonds that are paying 0.5% or less, while its interest rate that it pays on deposits that mostly chartered banks have with the Bank of Canada have gone up because, of course, the bank, since March, has raised short-term rates very quickly. So it's the difference between those two that is essentially gone from a net positive historically to all of a sudden a net negative.
Well, and I think that's a bit of the irony here, isn't it? In that part of the bank's problem is its very own policy to try to fight inflation.
Well, you're absolutely right. I mean, this is the cost of essentially that monetary tightening that has come very, very quickly. Obviously, we know that the Bank of Canada, and many other central banks were expecting that we would see a troubled economy for a much longer period of time. I don't think they were expecting that inflation. Certainly early on, even in late 2021, most of the discussions from the central banks were that inflation was going to be transitory and not too concerned. But here we are, fast forward to March of this year, and both in Canada and the U.S., we started to see that, oh my gosh, inflation is really taking hold. We need to fight this. And we've seen those short-term rates come up very, very quickly. Possibly we're going to hit over 4% with the next announcement from the central bank in December.
Mm-hmm. So what impact does this then have? You reference it very quickly in terms of government revenues, because I wonder the impact, because I also take it that the government, not only looking at its revenue situation, must now decide if it will actually, cover the loss that's being posted by the bank?
Well, I think the federal government will likely have no choice. This is what has flowed into the federal government's kind of revenue stream over the last decades. Now there's an outflow, and I think the federal government will have to deal with it. Certainly when we look at what's happened, what inflation has done to the federal government's books, it's actually a positive. As you know, federal and provincial governments take a share or a certain portion of our nominal income. And so if inflation comes up, that tends to drive up nominal income, and it drives up government revenues. And this is what we're seeing across the board from the federal economic update, a lot of the provinces are doing better than expected. There's some of that, of course, is raw material prices and oil prices that have recovered, but a lot of that as well is due to these kind of higher inflation. So, obviously there's a cost here to the bank. High inflation is costly to the Bank of Canada, but it's been in some ways a benefit in terms of the net revenues for federal government. So I think they'll have to offset this, and essentially cover those losses.
Now, of course, as you know very well, Tiff Macklin, the Bank of Canada, has been criticized in recent months, especially considering how quickly it has raised interest rates to try to take on inflation. We now have this loss being posted after the Trudeau government, at least, has been criticized for spending as much money as it has. So Tiff Macklin says there will probably need to be a review of the kind of tools that was used by the Bank of Canada at the start of the pandemic. Do you think that makes sense? What exactly would you be looking for if you were going to review the actions, given not only the loss, but now the situation that this country finds itself in?
Yeah, I think obviously every time we see an economic cycle, economics is not a perfect science. It's not at all like physics. Every time we think we understand how the economy is going to work, things change on us just enough to keep us guessing. But obviously, what we faced during the pandemic, again, was, something nobody could have planned for. And I think the response, both in terms of monetary policy and fiscal policy, was essentially appropriate and was, in the face of so much uncertainty, something we needed to do. Where you could criticize a little bit is as we started to close the gap on the economy over the second half of 2021, and certainly at the beginning of this year, I think both federal and monetary policy weren't really catching up to the reality. And the reality was that we were moving from an economy that was in excess capacity to one that was in excess demand. We were no longer, especially with respect to labor markets. So we were above our capacity. We were no longer able to deliver. Demand was too strong. The support programs had been generous. Interest rates had stayed low for such a long time. Housing markets had taken off. People were looking to purchase not only home furnishings and housing, but other durable goods, and we just couldn't furnish all of that. Essentially, I think that's where we could have seen a little more action earlier on from both federal and provincial fiscal policy, but also we could have seen the monetary tightening coming in a little quicker or a little earlier. Having said all that, though, we're in the situation we're in right now, and that is that we are seeing, I think, the effects of much higher rates now starting to slow the economy, starting to ease consumer demand, and I think there's some good news, especially coming out of the U.S. With respect to where core inflation is at. So hopefully we'll see that soft landing scenario.
Well, we certainly are watching. Pedro Antunes, thank you very much for the time today.
You're welcome. It's a pleasure.